Alright, here we go. Hey there, random internet strangers. It's Random Crypto Guy with the worst crypto channel on YouTube. Dun, 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 dun. Okay, enough of that. Let's get right to it. Let's go right to the dollar, as we always do. And, as you can see, we'll zoom in here a little bit. The dollar went on a tear these past 2 weeks. Has been on an absolute tear. We got our major green candle here, green Heikeneishi, and 2 weeks in a row the dollar has been increasing in its value. Showing strong rejection off of the this zone right here. I think that's due to they knew that they were going to have to pass this stimulus bill. And so what happens is that they pre-print at the Treasury the bonds that they are going to sell to the banking industry. And what I think has happened, I know Janet Yellen, despite what you might think of her, she likes the free market when it comes to the bond market. And she was just letting the price be determined by the market as to when people were going to start to buy in, and then so they have this surplus of treasuries that they print out. They just print the money out of thin air. They're stealing from our children, our taxes, our children's taxes, to pay for future expenses. And so they print the bonds out of thin air, and then the banks come in. Usually, it's not the central bank. It's the private banks, the Chase, J.P. Morgan, and even central banks from foreign nations, and they start buying these bonds up. But they have to be worth their while. So if the bonds are just sitting there, then that means that the interest rate, the return interest rate on the yield has to go up to entice them to buy. As I might be wrong on this, but I think this is what has happened. And so they have a buildup of bonds at the Treasury, and so in order for them to unload these bonds onto the market, they have to up the interest rates to get these banks to buy them. They don't want the Fed is the lender of last resort. They're also the buyer of last resort. They definitely rely more on market sentiment and psychology than we are led to believe, that that the Fed is just out there buying stuff. They don't, only if they absolutely have to interfere, that as a last resort. That's what they're doing. So in the meantime, the yields on these bonds are going up. So that has strengthened the demand for dollars, and whether it's domestic or foreign doesn't matter. It's increasing the demand for dollars to buy these treasuries, because you can only buy them in dollars. So that's why that people been. Banks have been pulling out of more riskier assets, like the stock market and even Bitcoin to some extent, gold, and everything has gone down this week because the demand for dollars to buy these treasuries has just gone skyrocketed. And as I've said in the past, the big money, the billionaires and the billionaires that are out there, they're not interested in the next 200x shitcoin. They're really interested in wealth preservation, and if they can get something where it's, a risk-free investment that can actually hold the value of their money somewhat, then they're going to take that. Because they know that they can continue to sucker us with stealing our money through inflation and through taxes. And most of America is completely blind to that. Only nerds like us that actually listen to stuff like this actually know that kind of stuff. So in essence, that's what I believe. I might be wrong because I'm not real certain about the bond market and how it works, but that's the general gist that I get from it. So these 2 weeks have caused us, because everything is measured in United States dollars, and you put it up against the dollar, and even though this is just a basket of currencies, how the dollar's doing against a basket of currencies, it just makes the headwind stronger for things like Bitcoin and gold to go up. That doesn't mean that they can't go up in value. It gives it a headwind where it can still, the demand can still be there and it can still move up, just not quite as fast. So it's not a complete inverse is what I'm trying to say. It's just, as you can see, that Bitcoin, well, this is the daily, let's look at the weekly first. Bitcoin has also gone up over this past week. I had a pretty bad down week. Did not get so down as to become a red Heiken-Eishi candle, but definitely a down week. And then we've been popping back up ever since. So, and went over 50,000. Let's go to the daily so you can see where the pivot is. Pivot's right here at this yellow marker right here. See, we pricked past it. The original pivot was right here at the tip of this wick, and you can see we popped past it, but then we retreated back. So there wasn't enough oomph behind the move. I think people are still a little bit spooked, but support down here seems to be holding up fairly well. No guarantees that this is going to be anything, any green dildos to the heavens, as Crown likes to say. I suspect it more of a bounce here again and then back down. I have some limit buys down in this area. Well, actually right here, down at the bottom, I think right in the middle of the wicks. Yeah, somewhere around there. And then I have one way down here as well. So I'm not completely convinced that this is over yet, but as more certainty, the bill passing final approval on Tuesday with the $1.9 trillion spending bill, and then they got another bill coming up which will sell more treasury for the infrastructure bill. Then we'll be able to see they'll continue to get that demand for those dollars, so it's going to be a little bit of a headwinds for a while, but I think more and more people are starting to wake up to Bitcoin's potential. So let's move on to Ethereum. Same thing, it's bouncing off of here, and then let's see here. What am I looking at here? Probably right around here somewhere. It's in the turncoat. So once again, when possible backing off a little bit, it's going to follow. Right now, Bitcoin's taking the lead on everything, and you'll see that in a little bit. But probably I'm expecting a small bounce back now. I'm not sure if it's going to get back down to these levels again, but that's all going to depend on what happens on Tuesday, because I think there's basically waiting for the other shoe to drop. This is gold taking a poop. I think it's really starting to dig into their market share. Bitcoin is really starting to dig into it a little bit. There's more and more people coming out, more and more famous, the star celebrities like the Shark Tank guys like Cuban and what's his name, Larry. They're going to continue to be on the forefront of actual adoption. As more and more people, they know those billionaires, the normies, the normie crowd. They don't know the Ed Tudor Jones and what Drunken Miller and people like that. They don't know those people, but they know Mark Cuban and Larry from Shark Tank, and so that's going to be a big boost as far as adoption, as more and more celebrities adopt Bitcoin. So the adoption curve continues to grow and continues to dig into gold's market share. Silver, though, I mean, we still got a lot of buying pressure, but it's starting to wane just a little bit, not a lot. The selling pressure is continuing on. Not so bad. So, I mean, this is just continuing to go upward, but we still got a lot of resistance to break through. So there was a lot of selling going on here, and there was some pretty strong resistance up here at $30. So I suspect if we do get a bounce back up, we'll get some demand as rumors of the infrastructure bill and the Green New Deal for more solar panels. I suspect that this will continue to increase in demand, but this $30 barrier is going to be a little bit tough to get through. Oil is just crushing it. I thought it was showing some signs of weakness here with these long wicks at the top. Let me zoom in here a little bit, and then it just crushed it as they continue to. A lot of countries are reducing. The news that I've been hearing anyway is that they've been reducing their output by like 1 million barrels a day or something like that. I just know that they're purposefully pulling back on production, get the price to go up. So I don't see that stopping anytime soon. It's not like because the United States is going after Saudi Arabia now, as far as them killing that journalist, the American nationalist journalist, and the situation in Yemen. Trump, Trump was all about the gas prices. He didn't care at no matter what expense. Yeah, go ahead and kill a bunch of Yemeni people. We'll give you some jets, and so you can go and starve children as long as you keep the gas prices low. So that was his way of thinking, and then he didn't push for justice for that American nationalist journalist that they're already saying that that the prince ordered the execution of that journalist. So I think that has a lot to do with it. It's not everything. The oil is a very complex market, but I think that is a lot to do with it. And they're holding back on production over there in the over there on the other side of the planet, and between that and then Biden canceling the Keystone Pipeline, which I'm ambivalent about, but it doesn't make sense that he would cancel the Keystone Pipeline but then want to bomb Syria because Syria wants their cut in the pipeline that they want to build across Syria to get oil to Europe from Qatar and the Arab nations. So I don't know, it's a big mess. Oil is wish we didn't need to have it, but it's here, and there's just so many products used that use petroleum products that you can't completely eliminate it from our lives, but we could definitely learn to live on less. Unfortunately, the monetary system that we currently have has us consuming the planet like termites, but I digress. Let's move on. Ethereum, Bitcoin. This is the daily chart. You can see that we had a nice rebound off of that It bounced a lot higher than I suspected. I think last week I talked about it being a possible bounce here, and we got a pretty nice little jump off of that. I still don't suspect it to go up to the levels that we saw back in 2017, where he was just crushing it, because the price differential is a lot different. Where it was like $10-20 and went up to 1,000 as opposed to 200, so that's a 10x above what it was before. So you've already lost that 10x value. So, but it is, if you look at the weekly, we do see higher lows and higher highs. So it's definitely starting to take a turnaround, but I don't expect it to be anything like it was before. Monero is on the daily. Looks like it lost a little bit of its luster, a little bit of a dead cat bounce, but it is holding its support here. Got some possible support holding it up, and this was merge support from some a turncoat support. So this is merged together, this box here, and then we have the 4-hour nested in here inside of that. So probably should hold. It's going to follow whatever Bitcoin does. Litecoin looks similar, a little bit stronger than Monero, but basically the same structure. You'll see that repeated throughout. The old pump and dump XRP continuing to pump and dump. I would wait for, if you're into this, I would just wait till we get down. Anything below 30 is a buy, and then just wait for the next pump and then dump it, because that's all they seem to do with this thing. I haven't seen any not hearing a lot on the news about it lately anymore. So Cardano is kind of taking the stage on that. Tesla taking they take another big dive. They are starting to see some rebound stuff, but I think what is happening here, and I'll get to that in a second, but let's look at the daily real quick so we can see what's going on here a little bit clearer. Definitely seeing I don't really see anything stopping this. I mean, we got a nice build up here, a little 4-hour demand area building here. That doesn't mean that it's going to hold, it just means that it's building, because it's the first iteration. So it looks like it's trying to turn it around, but honestly I don't see any real support for it till around 500. So this might have some more downside to it. We do have a little bit of bounce here, but until we get to here, right here's what I'm looking at, this rally base drop, and then we get a rally. Here's a rally, base rally here, but nothing, just normal behavior really. Just this is a big base here, so definitely right once got anything below 500 is a definite buy in my opinion. It's not financial advice, just what I'm looking at, what I see. Let's zoom out a little bit further, make sure I'm not missing anything. Yeah, it's back to the normal area, and then there's a previous area before it blasted off into the heavens. So yeah, I would definitely look at this as a possible buy coming up here shortly. Just something to keep an eye on. What I think is happening is a lot of the people are leaving the value stocks, or the growth stocks for the value stocks, for the old timey boomer stocks that pay dividends and stuff. I actually have a lot of stock in the company that I work with, Fortune 50 company, and I get, that's what I do. Put my 401k. I just got everything in that, and then get the dividends and stuff, and just dollar cost average in with my stock portfolio, and it's all the stock of the company I work with. It's not company I work with is not going anywhere, so I'm not too concerned about any type of defaults or anything like that. It's doing fairly well, and I think that the markets are starting to rotate towards those growth boomer, Buffett stocks, long-term holds, dividend paying. So I think we're going to see more and more of that as the particularly the Dow Jones Industrial Average seems to be taking the lead away from Nasdaq. You can see Nasdaq really taking a tumble here, but the Dow Jones hardly moved at all, and same with the S&P 500. The S&P 500 has got a little bit more growth to it than the and then the Nasdaq's very tech heavy, so this was a lot of take profit here, some distribution here, and then starting to get some reaccumulation. Hold on a second. Okay, sorry about that. I had to tinkle. Bitcoin dominance. Let's take a look here, and starting to see it droop a little bit again on the daily. Starting to show signs that it's not going to reverse. So that means the alt market is starting to strengthen again. So that's interesting. It's still kind of flat overall, but they're definitely starting to see more buying pressure. I don't like this thing here. Did this go away somewhere? I don't like this at all. Still learning this crappy system here. This platform. I mean, you got more instruments definitely, but as far as use, it's got a long way to go to beat MetaTrader. I just wish MetaTrader had better had the instruments that you could look at like TradingView does. So we're definitely starting to see that droop a little bit. Bitcoin, we already looked at that. Let's go look at DOT. We got some nice reaccumulation here. See how the wicks are rising. Got rising wicks up. Starting to see a triangle formation here. Looks like it might break up because we got more up wicks than down wicks in the triangle. So it's definitely looking like reaccumulation, picking it back up. Link, same thing. After a big dump off. Starting to see people buy the dip. Tesla, same thing, and even Yiffy is starting to look a little bit more positive, better than it did last week, that's for sure. So leveling off anyway, and Bitcoin is definitely still on a tear. Uni. I'm in this one. It's going up and trying for new highs. I like that. Wish I'd put more into Uni. I think this is going to be a smoker here. Anchor also in reaccumulation. And Vet, same thing. This one's looking more like Uni. Going for new all-time highs. And then getting some of the stocks, MicroStrategy, taking a dive, taking a little bit of a hit here after all the hype is over. It's basically gone back down to this level. Looks like we're going to start to reaccumulate. We've dropping down below the threshold. I'd like to see it flatten out a little bit before, but it's definitely starting to look like the distribution's running out. We got a nice level here. We got you got a rally base and then super rally, and then it just gave it all back, and so probably gonna base out here for a little bit. GameStop, looking like distribution still from the second high. It's probably just gonna continue to wind down and then pop back up, maybe smaller, maybe half the distance to the goal line each time until it just fizzled back out to whatever this was, or even less. Doge, despite Mark Cuban's hype with the Mavericks, I don't know. I think the excitement might be over that. You can only get so much from a celebrity pump. Lumens, not looking as strong as the others. Definitely, that's some distribution shit there. Yeah, it's not looking as strong as the others. XRP, we've already looked at that. And Cardano, same thing. It's starting to look a little bit distributive as opposed to reaccumulation. It might pick up again though. Cardano's got a good hype train going. It just kind of died off with the market, with the rest of the market right now. This probably didn't help here. This Kraken wick probably did not help either. So, alright, that's about it for that. Now I want to go into CeFi. Been contemplating this idea. I'm not big on credit cards and stuff, but what I went and did a deep dive on Crypto.com. Now I'm not sponsoring this. I'm not even putting up any links, but I just want to give my honest opinion about CeFi and what I've witnessed so far. And Crypto.com, the pluses, they got direct deposit, and they have a credit card, which I just received the other day, or not credit card, but a debit card, where I can take the money, I can top it off. It's more not so much a debit card, but a prepaid card, and I can top it up with fiat. Now there's things that you can't do with it that surprise me, that I can't top it off and then buy crypto with it on Crypto.com. Go figure. But the use case is that I would be able to take my fiat and the stuff that I buy with fiat, and then I can get 1% back in CRO tokens and CRO tokens. And then I can build up my token bank in CRO using my fiat, the things that I pay for, food, rent, electricity, insurance, things like that. And then I get that 1% back to put in CRO, and then I can build my way up to a Ruby and then eventually an Emerald. I'm looking at it. It's going to take a while doing it that way. I might actually, maybe dollar cost average in a little bit, $50 a week or something until I can build up to get higher returns on that. I haven't decided what I'm going to do with that yet, but what I plan on doing is floating as I get different credit cards, I've applied for the BlockFi. Uh, get Bitcoin 1.5%, and then 2.5% come next quarter. They're going to give out 2.5% for the quarter. So I've applied for this one, but it is a credit card, and so what I would do is float that, pay my bills with that, and then pay that off with the crypto.com debit card, and not let it accrue a balance. I'm very against credit, and but definitely you can add on. Every little bit counts if you're in it for the long haul. To 1.5% Bitcoin back on all my purchases, that'll add up over time. And then Celsius is coming out with something in April, a card. Don't know the details on that one yet, but I do have an account with Celsius, and I've really been happy with it. Crypto.com, not really good for Americans. You're better off with BlockFi or Celsius. So far, those are the two that I know the most about. BlockFi has its pluses. It's very easy, and you can flip. Though I don't recommend flipping. I used to, but I've taken a look at it. Tax liabilities and things like that. I've decided against it. And hodling is definitely better, and Celsius is definitely the place if you're a hodler. That's where, and you not as concerned about holding your keys or one of the barriers that I've come to get the normies to adopt is that a lot of people are afraid to hold their own keys. They're not libertarian in thought, where rough individualism and stuff like that. Talking with one friend of mine, great guy, smokes a lot of pot, but he's a great guy, and he's like, yeah, I heard about that guy who had $100 million on his wallet, and he only has 2 tries left on his key. He's talking about the XRP executive, I believe. And I was like, yeah, I can understand that, but you can get a custodian, and you don't have to worry about all that stuff, and you don't have to worry about whether learning about DeFi, because most people don't give a shit about that kind of stuff. They honestly don't, and most people are sheep, and they're just going to follow along with what if you want the sheep to come in, you're going to have to go. They're going to want CeFi. They're going to want other people to handle the back end stuff. You got your libertarians that are going to and your cyberpunks and nerds that want to handle their own finances, but even that has risks. Like here's the senior executive of XRP who can't access hundreds of millions of dollars of Bitcoin. So you're not immune against it. So there's always risk. There's always risk involved. So I think if there's going to be mass adoption, that CeFi is going to be that way. And what I've seen between the difference between BlockFi and Celsius, BlockFi is more. I think that their institutional side and their high net worth customers are more important to them than their low net worth customers. Whereas Celsius, they build a business from for the little guy. I think they're more for the little guy than BlockFi is, and they're a lot more transparent than BlockFi is what I've found. And they also have a lot more coins to choose from if you're going to hodl coins, and they got they got DOT and Cardano coming in, and those, when I see a bigger drop in price, those are coins I'm probably going to pick up in the near future. But right now I'm just stacking sats and chilling. If you're in it for the long haul, that's the best route to go. Um, I wrote a tweet about that. Jimmy Song talked about it as well, and I retweeted Jimmy Song's tweet and put my own 2 cents in it. You can go and take a look at that and compare trading versus hodling, and you can see the difference, especially if you use CFI to hodl. So, and you don't have to worry about, I mean, there's nothing. I have nothing against DeFi, and I'm seeing that the technology is improving. Where they're not getting hacked anymore. They're just, and the rug pulls are getting less and less. So that's good. So 2 of them that I'm going to be looking at in the future. Nexo. Now I've heard some things about Nexo under collateralizing loans. So that's got me a little bit worried, but some of the things that I've heard that are good is that they have fiat places where you can earn money on your fiat, so, and lend out your fiat. So that's something this is what I'm going to be looking at next week. This week was Crypto.com, and then Voyager is one that I'm going to be looking at. But from what I've seen about Voyager, they look very similar to Crypto.com. It looks so. What I haven't dug deep yet though. So Nexo I'm going to take a look at, and Voyager. And like I said, I'm going to give you my honest opinions of them. I'm not going to sugarcoat it and say rah rah, this one's the best, and I'm going to give you my honest opinion on it, and then you can decide for yourself. But as of right now, Celsius is definitely on top as far as what they offer for Americans and for the rest of the world. BlockFi, I like them, but I don't think that they're the best for people outside the United States. So the only difference I've seen between the two, inside and outside, is that they have Tether, USD Tether for their foreign, their people outside the United States. So, and that they are based in the United States. So I imagine the regulation's a lot harder, whereas Celsius is based out of the United Kingdom, and so what I like most about Celsius is Mashinsky going on doing their Ask Me Anythings every Friday at 1 o'clock Eastern Time, New York time. Really showing a lot of transparency and a lot of love and respect for the little guy, and then they're getting in with the big guys to so that we can leverage our money as a group again with the big guys to make. I really like all around the way Celsius is operating. Crypto.com, I'm just not convinced that they are the best for anybody. When I'm hearing about just nightmares of the app, you just go on and the app store and look up the reviews, and the reviews are just awful. And I've experienced it myself. It took me a while to get my KYC in, and just I haven't really, because I don't use the app that much other than just my direct deposit, and now I have my debit card, so I'm going to start using that in this week and find out what's going on with that, see how long it takes and things like that, and topping off my like I said, I keep calling it a debit card, but it's actually a more like a gift card or reloadable gift card than a debit card. But I'm going to be diving deep into Nexo, and then eventually, probably next week or two after that, we'll do Voyager. And the end result is I want to be able to, if they have a credit card with rewards, I'm going to float my debit purchases across so they can collect rewards on each one and then finally pay it off at Crypto.com. So, because that's the debit card, and the rest I believe are credit cards so far. Nexo might be different. I might have to take a look at that. I'm not sure about that yet. But that's all I have today. Thanks for coming by.